Hey guys, welcome back. I want to share with you another day trading opportunity. A little bit late here. I had to get the recording and whatnot going, but last week I shared with you a cool kind of day trading real-time walkthrough. You guys enjoyed it, so I said I would do it again. Now for you guys that are new, I don't personally day trade anymore. I gave it up in 2020 as I liquidated my day trading account. I'm going to focus on some longer term investments, but it was something that I did essentially from 2012 to 2020, so about an 8-year period. And we're looking here at a short on the pound dollar. Got to get targets on eventually, but essentially this is a nice little pullback trade, right? If I get rid of my little kind of deal here, you'll see that price action had come out of a little bit of a consolidation. We put in a new structure low here. There is some more room to the downside. We've pulled back into that level of consolidation, and this is typically going to offer us two opportunities. One, this could be a potential reversal. We could have a head and shoulders that ends up running back up to the upside. Two, this is a pullback trade which offers a little bit of relief. Now, a few things stood out here. One, you guys didn't get a chance to see it, but it was a very sharp, impulsive move. I don't think it was news related because it happened at a time where news typically doesn't come out, but a very short, impulsive move, which is typically I look at as being an overreaction. So a little bit of a retracement up. We'll probably see some correction to the downside. From a technical perspective, we have a few things here, aside from the fact that we're running into a previous level of structure. We also have some hidden divergence here on my RSI, my relative strength index indicator. And again, that's typically a sign that we look at as far as continuation in a trend. So we'll keep an eye on this, see how it goes. We have some nice confluence on the higher time frame as well. If I just kind of go back to the hourly here, you'll see that we came up, we held a previous level of structure there. Again, could be a head and shoulders, but that's the risk we're gonna have to take here. But I'll put the recording back up and see how this plays out. Looking for a retest of the bottoms here at about 15 flat for my targets, 115 flat that is. So I want to pop in real quick again. You can see the trade had a little bit of movement and then it stalled out. And this is one of the underrated kind of issues with day trading, is that day trading, you have to watch your position because things move pretty quickly, right? Usually in trading, we say set it and forget it. You can come back a few minutes, a few hours later, and typically a longer term trade isn't going to play out. So you can kind of get rid of those psychological battles by just avoiding them. In day trading, many of us are actively trading, so we're sitting here staring at our charts, and this will drive us nuts when we see the market spike down and we get all excited about making profit, and then we see it spike back up to potentially break even, and then the first thing that we want to do is get out of the trade, bail, right? Good moves happen fast, Akil always says, so this should have went down and slammed targets already. Now I want to get out and not lose any money. We have to put those thoughts aside. We have to stick to the plan, right? Everything is set. We have our stops in place. We have our targets in place. We have to trust ourselves. We have to trust why we entered the trade, and we just have to let it play out. So again, a good example right here of seeing price go in your direction and then literally seeing the bounce back and forth between green and red, green and red, green and red. And you just have to deal with it. So we'll come back once again, win or lose, hopefully win, and I'll keep you guys updated on how this thing plays out. All right, back again. Had to restart the recording. Computer crashed on me, but good lesson here so far, and especially for you guys that are familiar with the graceful exit technique. You can see that price action came up. We actually violated our previous structure high right here. This technically invalidates the trading opportunity, a higher high, higher close. Now, this specific opportunity is a little bit different because we have this overlapping level of structure right here. You can see this red VS1 zone, so there's a little bit more safety in it. But two good lessons right here. One, the power of even-handled numbers. You hear us talk about psychological numbers all the time. You can see that price came up right to a psychological number, 115.50, and that acted like resistance. Again, we do have an actual resistance level inside. Looking left, structure leaves clues, but those psychological numbers, those even-handled numbers do tend to be a very powerful level. So when we have the opportunity to, we want to avoid them. And that's why my stop loss is above that level. Two, the graceful exit, for you guys that are familiar, this offers a good example of this. So technically, the reason for the trading opportunity has been invalidated, and this gives yourself an opportunity to kind of save face. Price not only has invalidated your reason for entry, but now it's essentially taking you back to break even. allowing you to get out for just a partial loss, right? The cost of doing business versus taking a full loss. Now, this is not a method that I use personally. It just doesn't mesh with me from a psychological perspective. I've done this plenty of times, and plenty of times it would have worked, but also plenty of times I've seen it roll down and hit my targets, and that bothers me a lot more than the times that I saved money. But that's just, again, my personal experience. But this is something that you can definitely do to manage your risk and manage your losses. Because remember, a key to trading is you want to take advantage of your winners, your full winners. And when you have losses, you want to cut those losses as quickly as possible, obviously within your rules of engagement and rules of your trading plan. All right, so I'm back. It is a long time later. Remember, this trade started at a little bit before 10:30 this morning. It's about 7 o'clock at night right now. Usually I don't hold day trades this long. I take it out at 5 o'clock before the end of the day, but we're doing this for kind of fun purposes for the YouTube video. But we just got a lower low, lower close below structure, so I'm going to be able to reduce this stop, a little bit of risk management. So I'm going to pull this down to about 38 right here, reducing my risk to about only 10 pips. And hopefully in a little bit, we can make one last move down at our targets and be out of this thing, be done with it. I'll keep you updated. So we're back just a few minutes later. You can see we finally went down there, nipped it 115.02 flat. We are out of the trade, made some pips on the day, and got to show you guys a winner, right? I came in last week with an example, showed you guys a loser. I told you guys I don't care whether it wins or loses, because that is the reality of trading. You need to see more of it on YouTube instead of just people bragging about the wins. But it always is good to see a win as well. From a personal perspective, I made a little bit of money, and it's good for the ego. But this is also a realistic feel of what it looks like to be a day trader. Usually not this long. Again, I would have everything closed out by 5 o'clock, or just put a 1, cancel the other order in if I am going to leave it on. But dealing with the psychological elements of having it go in your favor, have it run back against you, have it go back to break even, have it run back against you again, and being able to sit through that while you're actively looking at your charts is difficult. As a swing trader, you typically have more time in between your trades, so you're not really peaking. With a day trader, you're usually at your desk, so you're watching it the entire time. And this is why it's so important that we work on trading psychology so that you can sit through these moments and really get paid for your patience. Again, in this case, literally. Now, before I let you guys go, I do want to talk about secondary targets. We didn't talk about this in yesterday's video because I'm doing one in, one out, short and simple. Managing a day trade for a long period of time is not the greatest thing, and I would never manage it overnight unless those first targets are hit already. But it is important that we talk about it because secondary targets or extended targets can be a very good method to make, the bulk of your profit. But it's important that you only do it, in my opinion, in a continuation opportunity, right? So in a counter trend trading opportunity where you're only looking for kind of a little bit of a retracement, a little bit of relief, I don't think there's any point in doing secondary targets because you're not looking for an extended trend. In a continuation opportunity, that's a different story because you're expecting that market to continue. So real quick, a method that I use to determine these secondary targets or these extended targets is really the same method that I use to pick counter trend trading opportunities, and it's something called the CTS system. Now, there are lots of tools in there, but the CTS system is basically a set of techniques that we use to try to determine when and where the trend is going to terminate. Well, right, if you've been following me for any time now, right, I don't believe that there's a trend continuation type of analysis. There's not a counter trend type of analysis. There is just analysis. And one of my methods for taking targets as a continuation trader is called think like the other trader. So the same technique that I would use as a counter trend trader to predict where and when the market is going to terminate or the trend is going to terminate, well, that's a great way to pick a level or a price point of where I should take profits at. And one thing we can do is this. We can use our Fibonacci tool. We can take it from the swing high right here of our most recent swing. Remember, this is the swing that we use to take the trade. Swing high to swing low. And back up. You can see we're going to get a 127 right down here at 114.62. Or yep, 114.62. We can also take a Fibonacci inversion from the pullback swing backwards, right? So swing high to swing low backwards, right to left. And you can look and see, and we're going to get a nice little bit of confluence right in that area. So again, 114.62 for 127, 114.57. You pick your price point within there. Good place for secondary targets. And you can see the difference, right? In the first trade, boom, we got involved right in here somewhere, right? And we're able to make about 20 something pips to the downside. Extended targets, this is where you make the bulk of your money, riding down for almost another 60. So hope you guys enjoyed. Again, good feedback. The last time I did this last week, showed you guys a loser. This time I showed you the winner. If you like these type of videos, just let me know in the comment section. Again, I want to make videos that you guys are enjoying. I know you like the live streams. I know you like the trading edge videos. If this is adding value as well, just type it in the comment section. Say, hey, Akil, I like these, do more. And that will motivate me to do more and at least try to do one a week if I have the time. So until next time, plan your trade, trade your plan, hit that like button before you leave, subscribe if you're new, and I'll see you guys probably tomorrow because I tend to post to YouTube every day. Take care.